And we're starting with a North American food service company called Sysco, and it's not Cisco as in C-I-S-C-O, it's S-Y-S-C-O.
Correct.
And it's a North American food service operator, as I said, serving approximately 425,000 restaurants, healthcare and educational facilities, lodging establishments and other customers.
Yeah, so lodging establishments means obviously sort of hotels and places like that. Market capitalization, $28.4 billion, so pretty sizable.
PE of 28.8 and a dividend yield here of 2.5%. And look at that share price graph, Chris Gilmour.
And I think that's really reflecting what we've been saying, you know. They recently bought a company called Brakes in there. So that's been all adding grist to the mill. But this has been a firm favourite for American investors for a long time. I think because of those very favourable dynamics to which I alluded a few moments ago. But yeah, that's a tremendous share price.
That is a good-looking share price graph. But the question would be, is it too late to get in and capitalize on this positive trend?
Well, there are a couple of reasons that it's going higher. The first is just the momentum and the secular story that we've talked about. The other is declining fuel prices, because remember, in 2007, 2008, oil prices going higher and higher. These businesses obviously have a massive fuel input because there's lots of trucks driving around and other logistical solutions happening. Fuel also gets used in the cooling and cold chain part of the business. So the general decline in crude oil prices has been favorable. Then the other thing was this Brakes acquisition. I always thought it's a slightly strange name to have for a food services business that drives around.
It sounds as though it should be in the automotive sector, Brakes.
It's a UK-based business though, and that got them into Europe. But it's not all that enormous. They bought Brakes in 2016 for about $3.1 billion. So that's about 10% of their market cap. But it is interesting because that takes Sysco out of being the #1 US food services company and into being a kind of global player. So it looks like a good deal and well timed for them, with Europe looking so much better in the last 2 days.
Anything else to add before we get hot or not?
No, I think we've covered that one. No, it's this is a good diversified company. It's great.
Hot.
Hot.
Hot, Paul?
Yep, and I think fuel prices importantly will stay lower for longer because we've seen just, you know, that those dynamics are fairly favorable.
Fairly favorable.
Yeah, that.